Was good, everyone? If anyone is there, uh, mm, a happy. I'll just get started since this is recording. A happy Monday to all. Um, it was a very interesting day in the markets today, and we're just gonna review some news to get it cracking, and get right into the charts right after that, and call it a stream. Actually, hold on. Let me All right, here we go. All right, let's get into today's interesting headlines. Oy, oy, oy. All right. Well, I'm not sure if you guys are aware, but this whole move that the commies have pulled is really blowing up in their faces in a major way. Um, no matter what they do, it just doesn't work out for them. And that's kind of what you see from day to day in the headlines. And that's what's the most interesting thing about it because media is theirs. If they're not looking good in the media, what's left? Literally, what's left? Not much of anything. So that's kind of what I like to use the headlines for, just to kind of see what's going on with the trends and whatnot. So first one I want to get into is Brent prices jump after oil-rich Libya declares force majeure across all oil production. So long story short, they're shutting down production for one reason or another, and exports on top of that. Um, Basically because of what's going on uh, between Israel and the rest of the Middle East, they're just shutting it down. So in conjunction with that, when you look at the crude market, what you end up seeing is, a six-handle rip so far, and it looks like it might continue to the other side. But we talked about this yesterday, last night, and this market looks like it's just gonna run for a little bit. Um, you know, Markedly, it has all of the reasons to be on a run going back to October, right, 2023. Um, and as we all know, given how markets work, it became a sell the news event. And what we've been seeing since then is essentially just what seems to be more so than not economic influences impacting the crude oil market more so than anything else. And you could cross reference that by looking at interest rates, but we'll just keep it moving for now. Um, yeah. So this is a pretty big deal because these guys determine a lot of the oil supply outside of the U.S. So that other part of the world over there across the pond. And in conjunction with that, if that Brent crude oil price is shooting up to the sky, that's going to automatically drag the U.S. version of crude oil that you find on the markets, and that's what we're seeing today. UCLA medical school hired students to write course curriculum emphasizing structural racism and health equity. Just wanted to bring that to your attention. Teacher fired after judge alleged January 6 involvement wins wrongful termination lawsuit. Once again, further evidence that if you know your rights, you cannot be oppressed. Cornell University to offer course on ecological justice, focused on feminist, queer, and trans perspectives. Now, I just wanted to share that one as well and remind people that Cornell University is an Ivy League school, believe it or not. So, this is actually a real thing. These are the countries providing the most, committing the most aid to Ukraine. And you know who's number one. You know who's number one. Yeah, you know who's number one. Don't act like you don't know. And then on top of that, you know they're selling what they've actually been sending over there. I can't really tell you what the rest of these fools have been doing, but I know for a fact the U.S. has at least sent 150 billion, at least, and they're only saying 75. So that's how that's going down. Are we headed for another Great Depression? Now, the reason I highlighted this headline is because ever since 2008 9, ever since that last actual economic recession that people can recognize in their minds, I'm of the thought that we never actually exited that depression. And I state this all the time. And I've laid out the economic factors that prove that. That being that we've been living under stagflation for the past 15 years. And in reality, it's really been hyperstagflation ever since September 11th, 2001. Because it was after that point in time, maybe plus 30 days later, that oil prices started going up and the cost of living started going up. Now, you could make the claim that incomes have gone up and whatnot along with that, but you really better know what you're talking about if you're going to make that claim because it's not true. And that's precisely why we've been in a depression the entire motherfucking time. Unless you've been moving from one job to another, one career to another, your earnings power has not kept up with inflation, period. End of discussion. If you stayed at one employer that whole time, you've definitely been fucked in the game. Unless you've moved up, right? So think about how the quality of life has decreased since 2001 to now. It has not improved, it has decreased. So we've already been in a depression. People don't recognize it because they're not being told, hey, this is a depression. But when you look at the economic facts, now only the economic facts, not the fake laws that they like to pretend and rules and all this crap that they like to throw out there. Screw all that BS that they like to throw on headlines. Like they were talking about that stupid ass Sam's rule, which ain't even a thing, for like 2 weeks because it was worth them talking about it. But that's not even a real thing. That shit is fake as fuck. There ain't no such thing. So, in line with that, once you understand how an economy actually operates and what are the drivers of an economy, you can understand clearly that we've been in a depression ever since that point in time for the reasons I've outlined. No income growth and hyperbolic cost of living increases across the board. Across the board. Now, of course, salaries and wages have kept up somewhat because they've had to, begrudgingly. The rates of change are not comparable, period. So we'll move on. Them scramble to walk back price control scheme. Now, this is major, folks, because this is a cornerstone. This is a cornerstone to their policy maneuvering. You must understand. America's been an oligarchy ever since I've been born. So we're going to full-fledged communism right now because nobody even understood we were under an oligarchy that entire time. Where are the antitrust suits? Where are all these things that promote competition economically? They don't exist in this country. Period. They do not. Everything that has happened in the past 40, 50 years has been to crush economic liberty. Everything. This is what credit is all about. And people don't understand that because they love to spend money they don't have. I mean, in all honesty, that's what's promoted in our society. Moving right along, however. Dem scramble. Democrats are in damage control mode after Kamala Harris says communist price control scheme received a harsh rebuke, including from the Washington Post, which is crazy, which which characterized the which characterized it as populist gimmicks. Facing pressure to defend the plan, Democratic lawmakers are downplaying it as a pipe dream that has no chance of passing Congress, Politico reports. The plan revealed as part of Harris's first big economic policy speech has become a focal talking point for Donald Trump and allies who continue to frame it as communist price controls. Well, look, if you guys have been around long enough to read a book, you probably already know that this does not work because this is exactly what they are, communist price controls. So, you don't really need some newspaper to tell you that. But it's nice to see they're catching on that we know. And that they got to fucking backtrack like crazy before they get fucked. Meanwhile, food industry officials and some left of center economists have warned that price controls could be detrimental, according to the report. Central to the plan is a call for Congress to pass the first ever federal price gouging ban on food and grocery stores, mirroring legislation reintroduced by the retard earlier this year, for which the retard was taken to task by CNBC's Joe Kernan, which we watched yesterday. And that was a good little back and forth. And as always, nothing of value was provided from the policy recommender, which is nothing new in our world. Now, 6 congressional Democrats and 5 Democratic aides tell Politico that they've been privately telling critics that the plan isn't viable and is instead a messaging tactic, to divert blame over inflation from the Biden from themselves. Like, this is how dumb it is. These people are so fucking dumb that they can just utter pure moronous, just pure stupidity like this and get away with it. But this is that bad. It's so bad that they can't even. She won't come out and defend it, obviously. She will look like a moron, and she could literally not. Like, she doesn't have the verbiage. She can't be coached enough because she just doesn't know anything about anything. So, Israel launched preemptive strike on Hezbollah in Lebanon to prevent major attack. Think about that one, and think about it hard, because that makes zero sense. Death of Woke, queer activist video game funded by the EU, can't find players. Now, imagine living in the European Union, which is a farce all within itself, and seeing this headline. Ah, Jesus. This is just insane. I mean, I do not understand how people take politicians fucking seriously. Shit is beyond me. It's really beyond me. Like, what the hell is wrong with you people? Like, you gotta be some special kind of stupid to take this shit seriously. Wow. Anyway, back to the market. So crude ripped today. We talked about it last night, and last night, let's break this chart down to a 55-minute per candle bar. Let's see. Last night was Sunday. And there we go. Let's see. Around the time we were streaming, prices were right here, floating around the, come on, 75 mark, a little bit higher than that. But it was just floating around here, and then this morning, just went where it had to go, because that's pretty much just how markets work. Should tag VWAP. Question is, what happens thereafter? Um, and that's gonna be interesting because if you guys can see, we got actually hold on, hold your horses. Let's go to the actual chart. There we go. So a little tip on futures: when you're doing trend lines, you want to actually draw the trend line on the contract itself, but you do want to find the pattern on the at least in my opinion, you want to find the pattern on the composite chart, but you want to verify it on the actual contract, you know, the chart for the actual contract. Let's get the line in motion here. Let's see what we're working with. Mm, uh, it's okay. Okay, we'll see. We'll see how that works. That might work. That might stick. We've been bullish since down here, so we're just looking for patterns now to identify what the market could or could not be in the process of doing. Um, don't really like that trend line, but let's assume it connects up here instead. If it does connect up here, let's get this magnet on here. Bam. All right. Yeah. If this, let me just extend to the right. Yeah. So if this holds and price continues higher, it should eventually come back and test this area. So let's presume this market is breaking out. First of all, it's important to remember that moves happen in the market. They happen like waves happen in the ocean. They're always in motion. Water is always in motion. Water is never still unless it's in a lake or a pond or some still body of water, right? And market prices are the same thing. So what do I mean? Well, think about it like this: when the market goes up, right? It goes up from the smallest time frame to the biggest time frame. And when it goes down from the biggest time frame to the smallest time frame. Waves happen in the same fashion. They start out small and finish big. And then when they're done being big, guess what? They go right back to being small. That's how I view the market. So that's why I do multi-time frame analysis. So keeping our analysis in line with that reality of markets and ebbs and flows, right? If the market is going to roll over and potentially, uh, you know, tap out on this up move, right? That's something that should be visible. You should be able to pick it up in the shortest time frame. But what we're finding is that the market is getting bid. It's finding volume. It's finding buyers. It's maintaining bullish structure. So it will continue to go up, right? So it's just about looking at those obvious things. This thing could come down and fill this gap all the way to the support area, 75 and 3/4. But the question is, will it stop there or will it continue? right? Odds are that it will stop there and then continue higher, but it first has to break this 77, 76 and three quarters area because there's obviously been buying interest here all day. We're talking about resistance that has now become support, going back to 8 in the morning Eastern time and happening again midday at 12 noon and happening again in the towards the end of the day, 4 p.m. So we know that this area of 77 to 77, 76 and three quarters is a pretty interesting area, right? So anything below there could potentially lead to an emergency situation for anybody that's bullish in crude, right? So that's kind of how you have to break it down day to day, right? Because it looks like the market is gonna just continue floating higher. There's a besides the fact that it looks like it on the chart, um, there is nobody really. I don't know if people are. Damn, you know what? That's a good thing. I need to figure that out. I don't know what the sentiment is right now, so I need to figure that out in crude. I haven't seen people really talking about it outside of the regular, just regular stuff. So in my mind, I'm not thinking that it's time to tap out on the longs yet because being in at the bottom theoretically is kind of a position you don't want to let go of. You want to hold that bad boy till the wheel fall off. So after a six handle run, we're going to keep holding on and just watch our risk essentially. Because if you look at the 144 and then move out to the daily, it kind of looks like this thing has just been accumulated all below 77. That's what this is showing. So what we want to see is what the market is going to do above 77. That's what we ultimately want to see. And for now, we're tagging a move to 79, 79, 75. All right, so up there, basically a couple of bucks from where we're at. So there's still some pretty significant premium in the market left, assuming the fundamental market tone continues to line up with the market structure, which should be underpinned with the current lack of interest in the market. Because if we look at that, just look at this here, cumulative delta, right? At one point, at the bottom, at the most bottom of the market, you had a lot of people selling, right? But what happens is when you look at the volume, and let's get rid of the contract here. So this is the 21st, right? When you look at this, you end up getting a lower volume reading on this day than on the previous high volume reading day. So what does that mean exactly? Well, if this many sellers are entering the market, but the overall volume is less than a previous down move, essentially over here, then how can this be a move that's going to be sustainable when there's actually less sellers than there were at the previous move, right? And that's where you get this decrease in downward momentum from. Market is already picking it up. And guess what? The market took off right from there. It didn't even play around. So that's how you know it was a serious level. No, it's market analysis is not much more complicated than that. Um, which is a good thing, but also a bad thing. Because if you're one of those people that does that likes a bone, you like a dog with a bone, you just keep digging, and you can keep digging too. So you gotta know what the drivers are for a market. That's just pretty much what it boils down to. And that's why I love futures so much. It pretty much is cut and dry what the drivers are, and that's positioning, liquidity, and sentiment. If you can figure out all three, you can find you some pretty big ass trades. Now let's check out what gold's doing. Well, actually, let's look at cotton. Cotton is bounced. It kept going. We were talking about this yesterday, and we want to just see this bad boy come and touch that 67 half area, basically. So we want to see. We want to see it come back down here. You know, let's keep it to the top 5 markets on these daily recaps, and if anything does stand out, I will definitely bring it up. But that's why we're gonna do this. So gold just continues to float. Um, I don't know if shorting it ever makes any sense. I would say that waiting to buy the dips is kind of what you want to do. And of course, you want to play the risk side of this. You don't want to be essentially playing yourself. So, you want to be long when price is above the short term 9-day exponential moving average, and you don't want to really be engaging it below it unless you're looking to buy that dip, right? So that's kind of how you got to look at the market. It doesn't matter what the instrument is. We could be talking about hex, pulse chain, pulse sec. Like, it's all the same, and that's kind of the point of all of this. Doesn't matter. But what you got to know is what you're talking about and what you're looking at. All right. So let me zoom in on this just because this has been that main example I've been using to kind of educate you guys on support, resistance, and whatnot. So let me get rid of some of the stuff on this chart because it's looking a little cluttered. Let me just get rid of the moving averages. Now, you guys got to remember, this is Sunday right here. Everything, right here. Everything from where my crosshair is forward to the right is Sunday's price action into Monday. And I did all of these lines before the market opened. And look at how the market respected them. Right? And that's what I want to highlight. And it's not because I made them, it's just because of the process. And that's really the key. Actually, let me get rid of this here. Get rid of the volume profile. Just so it could be a little clearer. Like, that's really the key that I want you guys to get. And you know what? Here's what I would consider another 13-minute, maybe 55-minute. Let me see. Yeah, nah, this is a 13-minute. This is a nice 13-minute level right here. This little zone right here where price is right now. Be a nice little area to watch. But you have this resistance above here, so you could easily just slip through and bloop, end up coming right back down here. Anyways, the point is that once you get the process down, you can pretty much figure out support and resistance on any chart. So please go read that piece I wrote on Substack and start working on the process so you can see how easy it is. Because it's really not that hard. It's really not that hard. But as we zoom in, though, just to make the one comment on it, the market looks weak. But the critical thing to understand about equity markets is typically when they look weak, they are a lot of the times just setting up for a continuation move. So it's important to just be patient and let the market confirm a short move. Because if you look at this initial thrust downward, um, if this initial thrust downward was supported by a lower read on the moving averages up front over here, which could still happen further ahead in time. But for now, we got a higher high versus a lower high previous. Therefore, the trend is still up because even here you got so far you have a higher low versus the previous low. even though you have shorter, less volume according to cumulative delta down here. But again, you gotta let the market confirm that, because if you didn't get short up here, which was the ideal area as we already saw when we zoomed in, right? The ideal area was up here. And in a lot of instances, that move from 5664 to 5669 is a pretty sizable move, because typically players in the futures in the S&P 500 don't use those wide of a stop, like 5 points, and I mean that's just not common. A lot of guys do 3 or 4 point stops, including myself. I'm not really doing big stops like that. So that's why you see that big ass spike right there, because it's obviously a resistance area right here. So run that bad boy up. That's just how markets move. Because there definitely was a lot of stops there, right? Because when you look back, what happened on Thursday? Well, the market didn't go higher than 6.525. So today, why not run it up another 5 points where people are going to have their stops? So that's just how markets work. So besides all of that, if S&P continues to build higher local lows, which is what it looks like it's doing right here, sustaining momentum above the long-term moving averages, the blue and the white one. Um, this is on a 55-minute basis, going out to the daily. What's going on with the daily? Let's take a look at the moving average and see where that short term is. I don't like to keep it on the chart, but I like to look at it once the market's sold up. So price is still above it, so you gotta look for longs. And that's pretty much just what it boils down to, right? Because when you look at the cumulative delta, the volume is still above the moving average we have here. So you got to maintain that bullish momentum and comprehend that this could easily just be consolidation. Because equity markets, that's how they move. That's how they move. You'll think that you're getting set up for a move lower, and you could be. If you're looking at the Nasdaq specifically looks way weaker than the S&P 500. So on a percentage change basis, hold on. On a percentage change basis, if we look at the price action for today or for Monday's session, we had a negative 1% day for NASDAQ, whereas the E-mini, it didn't go down that much at all. I think it might have been half of that. Yeah, quarter of percent down on the day versus a whole percent down for the S&P, for the NASDAQ, excuse me. And I think it might have to do with the fact that people might just be taking profits because there's going to be NVIDIA earnings on Wednesday. And we'll take a look at the economic calendar when we wrap it up. It's almost done here. But NASDAQ, you see, this is what I meant about the E-mini. What was that gold? We'll see. Nope. E-mini. So that's kind of what I was talking about earlier. Like, you guys see how the moving averages are kind of equal in terms of height. When you go to the NASDAQ, it's not what you see. You see a lower height versus the previous peak. And that's what I'm talking about. That right there signifies decreased momentum for sure, because the averages are not maintaining that level. So that means the price is weaker around here versus to over here, which you can see why, right? Prices previous to this point were much higher than they are here. However, that just signifies some weakness around this level, which is critical for the market, as we identified before. So the question is the market just going to pull back, test, and go? We'll see. Because if it doesn't stop, well, we know what's going to happen. Because at that point, momentum will be confirmed lower. Cumulative delta will more than likely be below the moving average in a different fashion. It won't look like that, like if it's consolidating. And this will start going lower, which will mean increased volatility. So, yeah. Let's take a look at the crude market. Oh, no, that was the first one we looked at. Let's take a look at the bond market, and then we'll be able to wrap this one up. Bond market just looks like it's consolidating, even though it also looks like it's going to roll over. This market is extremely short. And what I mean by that is that institutional players, not necessarily hedge funds, but asset manager banks, all the entities that engage this market. A lot of them have paper on the books with respect to all that stuff that was happening during ZIRP, zero interest rate policy regime, which was from like 2009 to 2020 or something like that. Lasted forever. So based on people understanding that that's supposedly over and the tightening and all of that, the market was definitely leaning short, and it's been leaning short for the longest time. And it's only really recently that people are starting to realize that they might be off sides, right? Because as we talked about yesterday, with the Fed funds and 2 year spread, that's the barometer, right? And it ticked up a little bit today, actually. Looking at it now, it ticked up a little bit in today's session, and that's what we're seeing here, right? Um, and these are just things to be aware of, guys. Just we look at this stuff every day, and when you look at it every day, it pays to notice those little quirks and whatnot, because it'll be those little things that nobody sees that stands out that gives you the green red light. A lot of people think that this market is not loaded to go long, and you know I don't think people remember what this chart looks like when they say things like that. This is 21 days per candle. Does this look like a short to you? I mean, not to me. Not to me at all. This looks like it's going to at least head up to 150 to me. And of course, it's got resistance at 135 and all these levels up here. So it's not like it's going to be a straight shot. But to consider that the market might not recover 135 and, just leave it at that with no other probability of anything else happening is pretty dangerous as well. And those are the kinds of things that I just advise people against. Do not put your mind in one lane. Markets go up, down, and sideways. And that's really the most important thing to understand, because let's talk about Pulse Chain, Pulse X, Hex, and Ink right now. People do not understand, and I want to bring this up actually, because it's just, I mean, to me, it's borderline just self disrespect. And you guys will see what I'm talking about in a minute. So RH posted a tweet from an article in New York Law Journal. And it's real basic stuff. It's not nothing fancy. Ishmael Green, a partner at Diaz, Ruiz, and Targ in Miami, and uninvolved crypto experts, said the ruling and its fallout could impact other digital assets because, quote, Pulse Chain is essentially a copy of Ethereum, and Hex is essentially Bitcoin with a certificate of deposit function, end quote. Continuing. Quote, continuing, this provides a roadmap for anyone creating a cryptocurrency who wants to remain outside of the SEC's enforcement arm. Ishmael Green, a partner at Diaz, Ruiz, and Target Miami, said, this case will go down in history as one of those cases that nobody saw coming, and it is very important. So if you wonder why I don't talk about crypto anymore, it's because I don't have time to talk to morons that have no interest in reading what's already there in front of them in black and white. I am not Richard Hart. I'm not trying to save you or the world per se. I'm trying to educate you. And if you don't want to be educated, that's your own goddamn problem. That ain't mine. The information is free. All I'm doing is showing you it exists. So if you don't want a better life, nobody can help you with that but yourself. And that's the reality, right? This is why I don't bother. There's no need for me to. As soon as these lawsuits dropped in 2023, I don't even really remember. I'm pretty sure it was 2023. July 31st, 2023 or 22, whatever it was. Whenever that thing dropped, I literally did a spaces 2 days straight explaining item per item why this case was pointless and a waste of time to even consider as anything serious. And here we are, however many months later. Yeah, yeah, we know. We know. All right. So thank you guys for tuning in. Remember to read. Remember to learn how to read. Remember that no matter what somebody says on the internet, on TV, etc., doesn't matter if it's not written down somewhere and codified, which nothing is with respect to crypto. Therefore, none of this shit they talk about applies. So enjoy the rest of your night. Peace.